Hey everyone, in this video, I'm going to do a request from one of my members, Lucy Doyle, who asked if I could review Block or Square stock. Now, joining as a member is easy. It's just $5 a month and you get priority comment response and priority on video requests. I truly appreciate those of you that have already joined as a member. Now, let's review Block and answer if investors should consider Block stock as a buy, hold, or a sell.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Alright, so Block, formerly known as Square, has an interesting way it calculates revenue, and the main uniqueness for this company is the way it accounts for purchases of Bitcoin. And so because of that uniqueness, I feel that looking at the company's gross profit is more informative to its growth prospects than looking at its revenue. So it's one of those unique companies where I have to use a different form of analysis looking at the company's growth. Now, it has done a great job increasing its gross profit in a trailing 12-month period up to 7.88 billion, up from less than 1 billion in 2015. The company has several growth drivers, the main one being the Cash app that's growing very nicely year over year and quarter over quarter. That should continue to drive growth for the company longer term. Now, one of the metrics that I'm not very impressed with Block with is the cash flow from operations to sales. At 1.29%, the absolute number is not very high. Additionally, the trend line is relatively flat. So you could see over the last decade, nice growth there for the cash flow from operations to sales, up over 10%, and then coming back down and leveling out here at around 1.29%. So the number 1.29%, of course, not very high, but I wouldn't mind that number being not very high if it was demonstrating trendline growth, improving year over year as it moved forward. But you're not seeing that either with Block, so relatively flat in terms of this metric. However, that's not the case with its operating profit margin, where you do notice a nice upward trend line from Block. So its operating profit margin over a trailing 12-month period came in at 2.95% most recently, and that was up from negative 10% in 2015. So you could draw a nice upward trend line here for Block as it's moving upward here. So even though the number is not very large at 2.95%, I like that the company's made improvements, increasing the operating profit margin as the years progress. Now, looking forward in this metric, the investors or the analysts on Wall Street that are following Block or Square, they expect the company to deliver 59% growth in earnings per share over the next 5 years, each year. That's phenomenal growth, and that would be more than double its previous 5-year growth in earnings per share of just 23.46%. Block is expected to increase profitability over the next 5 years as it approaches economies in scale, reaches large numbers in its Cash app, and that will allow more profitability because the investments in research and development and the app and the website and the functionality, the plumbing behind the business, can scale across a larger number of members, and the cost per member will decrease. So that will drive growth here for Block longer term. Additionally, the analyst price targets are bullish here. The average price target is at $91.31. The current share price is at $64.08. So the analysts on Wall Street that are following Block, they think its earnings per share are going to grow robustly over the next 5 years, and that will drive growth in the stock price. I always say the number one driver of a company's stock price is its earnings per share. And that's the number one area I like to focus on increasing the stock price. I prefer that than relying on the multiple to grow. There's two parts of a company's valuation. It's how much profit it generates and how much investors are willing to pay for that profit, right? The earnings per share, the price to earnings ratio, right? So if the earnings per share increases, then you can have a stock price that increases while the multiple, the price to earnings, remains the same. But if the earnings per share does not increase, the only way for the stock price to increase is for an increase in the price to earnings. So you're going to count on investor sentiment to improve, investor psychology to improve. That's a less reliable factor. I try not to count on that factor for increasing stock price. I prefer to rely on growth in earnings per share. And then if you get a benefit from growing multiple, let that be gravy on top. That's not what I like to rely on. So looking at Block, it's trading at a forward price to earnings of 14.82, which is relatively cheap for what you're getting in the company. It's improving its operating profit margin. It's increasing revenue. It's increasing usage of its apps by millions of active users. And the forward 5-year forecast for earnings per share is extremely robust compared to the forward price to earnings ratio. You're getting a company that's expected to grow earnings per share by 59% per year, and you're paying a forward price to earnings of 14.82. I always like when I'm getting a company that's growing its earnings per share at a rate that's greater than the forward price to earnings ratio. So in this case, you're getting 59% earnings per share growth when the price to earnings is only 14. So you're getting much faster, much larger number in the EPS growth versus the forward PE ratio. I always like to see that. So in terms of Block, is it a buy, hold, or a sell? Well, here's my list of stocks and my ratings for all of them. And if I were to add Block here and I were to rate it either buy, hold, or a sell, I would rate this company as a buy. And I'm updating this today. I like the valuation, I like the growth prospects, and I like the progress in profitability for this company. So once again, let me thank Lucy Doyle for making this request, asking for a review of Block/Square, whether or not it's a buy, hold, or a sell. And once again, if you'd like me to make a video for a company that you're interested in, just ask in the comments section below. Just please be patient as the list of recommendations grows. I do keep the list and I go down the list along the lines of my plans for research as well. So when they match up is when I do these videos and take requests and make videos from my list of requests. Those of you that are already joined as members, thank you so much. I truly appreciate it. It really helps support the channel. It really helps me make videos just like the one you saw here. So thank you so much. I really appreciate it. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.